Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar has been on a tear in the past few weeks as the US dollar has plunged. However, the market bulls hit the brakes overnight as the US took a break in observance of Martin Luther King Jr.'s birthday. However, as the technicals hold steady and expecting to see further whipsaw price action due to the recent candle, which is close to a shooting star, the market may display a little bit of supply and therefore could see a pullback, looking towards the region of 69.35. However, with the market remaining above the 68.60, I feel there is further upside attempts and could eventually see the target reached around 70.5 to 71 cents. But as I mentioned, the level of 68.80 is the key to the upside, as a break would negate the call and therefore reopen the downward movement to 68.30 and maybe down to about 67.5. As I mentioned, the market in the US was closed in observance of Martin Luther King Jr. The lackluster performance has given the US dollar a little bit of momentum as it rebounds off the lows around 101.5 and now currently trades around 102.16. This has put a slightly weaker step into the euro for the start of the week. However, the market is likely to find support anywhere from around 107.45 to around 107.90. I feel that from this region here that we could see initial bargain hunters return and therefore look towards his objective, which is still currently at 109.45.60 before any bearish ambush or bearish correction. The dollar yen, well, the market has found initial support in front of that key level, which is at 126.65.75, and displaying a modest rebound could actually see a slightly further up step, that is towards the region of 129.15. But as we get closer to this downtrend, the market is likely to struggle anywhere towards the region of 129.85.95 to 130.75.95, although it does seem a little way from where we currently are. Nevertheless, any movements to the upside may fail, as I feel, as we do need to see further evidence in the US dollar to support its bounce. Sterling hovering above the key level, which is around the 121.15.25 area, and I feel the market is likely to display further weakness if we see that crumble. I felt the market could find support around 120.80, but looking more to the fact that we could see around 120.35. However, I don't want to get too bearish because the technicals haven't quite broken down yet. So let's see how the market plays in front of that level, either at 121.70 or 121.15.25. But I feel if the dollar does fail its rebound, then we could overall expect to see the market look towards its objective, which is at 123 to 124. Finishing up with oil and gold, first of all, the market is still a little bit lackluster, but the trend is still bullish and we are overbought, and the ADX does question whether we can continue on this bull trend, but I feel the market may actually display a little bit of profit taking due to the recent high of around 1,930, that we could see the market pull back to around 1,901 to 05 and then maybe take another step up. I'm not abandoning the top side objective, which is around 1,950 to 58. Due to this current pattern, the breakout has given a measured move up to that top side, and I feel this is where bargain hunters are going to step back in and eventually take the market higher. Wrapping up with oil, the market did show some hesitancy, but on thin volume due to the holiday in the US, we found a bit of hesitancy towards that top side level around 81, currently looking back towards the support. A break of 78.5 may actually give further weakness and look towards the region of $77.80 and maybe even a touch lower to around 75.80 and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and I hope you enjoy the rest of the day.